we've got some interesting things to discuss today. Yeah, one of the major things I want to talk about, and this is so fundamentally important for a trader to know. What happens and what tends to happen, most people don't realize these small things. That in the markets, when it comes to market volatility, it is always mean reverting in nature. Okay. What do I mean by volatility being mean reverting? I mean to say, first, what is volatility? Volatility is how much and what extent does a stock or index give a one-sided movement. Okay. That is, there's big moves over here, straightforward moves over here, as we can see. Let me just change the pen color. Yeah. You can see these straightforward moves over here, going vertically down, right? There are straightforward moves over here, going vertically up. So there are phases during the markets, no matter which time frame you're looking at, where the volatility is actually very, very high. And then there are phases of the market where the volatility is not so very strong. Okay. So if we look at the fall which happened recently, there's a highly volatile market because we are seeing one-sided movement, right? When earlier we saw that before the election the market rose over here, we saw one-sided movement. Now one of the basic principles for a professional trader to follow is that we are here to not just identify the direction, we are here to also identify the spaces of volatility. Most retail traders have an issue understanding that. So they make money on one day and then the next day they expect a similar level of volatility to kick in so that they can participate with the markets. How many over here have had that kind of an issue? Can you show me with a raise of hands? That you have expected volatility which made you money yesterday, and coming the next day you do not see so much action happening in the market, so much movement happening. I can see some hands up, right? So when you are in a situation like this, you must understand that trading is a psychological game. It is as much methodical, of course, when it comes to technical analysis, but it is a very psychological game. And if you want action, I want to come during the market hours every time and expect a trade, somebody sharing something on social media, maybe Telegram, maybe Twitter. All these kind of things become very rampant and spoil your psychology. At some level, you do not want that psychology to be spoiled because your brain functioning is relying on so random decision making that cannot make solid decisions. The better way to go about it is to be like a professional trader. And as a professional trader, you must have seen how I express things on my Telegram channel. As a professional trader, you do not want to go for too many trades, but you want to go for a few really solid trades, right? And those solid trades should have the ability to bring about your analysis into both direction and volatility. Now, of course, if you are a short-term trader, then probably you're looking at the hourly chart, you're looking at the 15-minute chart. Yes, you can get more frequent trades. Like for example, right now, as I'm looking at the 15-minute chart, I just expect the Nifty to really cross these levels. If we sustain here, start going up, we can have a rally right now. Okay, we can have a rally right now, no matter how the participation. So if I take this range in which the market is about to go, that is from the current levels to about 11,590 levels. Okay, if we start moving, I really expect the market to go higher. Okay. So this is when I am expecting volatility out of a certain context. And what is my context? My context is looking at the 15-minute chart, looking at the hourly chart, right? Now, when I'm looking at that 15-minute and hourly chart, of course, there will be times when even in that time frame, I'm not getting any trade. And therefore, I have to wait for those trades to develop. Like I'm waiting right now for the trades to develop. And what I'm seeing in the analysis, I will explain you in just a moment. Since I was seeing it right now, I had to jump into it. But when I am expecting trades to develop, I imply multiple variables into my analysis. Number one is the ongoing current trend. Number two is the potential for the market to show me multiple cues like pattern based analysis, cues like Japanese candlestick based analysis, cues like momentum analysis. And if those cues put together match up and make some sort of alignment with each other, that is how you get the maximum benefit out of your analysis, and you get to understand where are the strong moves placed. Now, for example, a few days back I shared an idea on Bank Nifty. Okay, and this is all for education purpose, I must say that. So on Bank Nifty, somewhere around these levels, I went short on Bank Nifty. I took the trade in the form of buying puts. The whole point is that I went short. Whole point is that my bet was on the downside. My trade was on the downside. And there is an extension of this move all the way to a massive 500-600 points, which was easily tradable. Okay. Now, one of the core mistakes which people make during markets is that they are looking at trades which are not tradable. They want to jump into random movements, right? And I'm looking at trade where there is enough strength for me to take a trade and to exit a trade. So, what was I looking at in this entire scenario? First of all, let me get to the weekly chart. On the weekly chart, I was seeing a certain candle. Okay. Now, I was seeing a cluster of candles with relatively higher wicks. Okay. Now, this is showing me that there is a strong resistance on the weekly chart around the 31,700 area. Going forward, what happened is that the market came and revisited this area. Now, if I split this to the daily chart, this is what everybody has been asking me. If I split this to the daily chart, then what happens is that I see that in the upper level of this gap zone, market has taken a support and heading back towards this area. While market is heading back towards this area, it is showing me signs of weakness. What are the signs of weakness? Okay. On a very normal level, if I have to tell you, the signs of weakness over here are the smaller examples, right? Smaller candles. They are the smaller candles. They are the candles which have a higher wick. Okay. Now, why am I talking about higher wick and how does it imply bearishness? So just imagine that if I'm looking at this particular candle, okay, which I zoom into over here. Let me remove this pen mark. If I zoom into this candle over here, what does this signify to me? That during the market day, let's check out what happened in the hourly chart. This is the 4th of July. Now on the 4th of July, which is this day, in the hourly chart, it is seen that the market went up, but the upper region has not been given enough participation to. The market is rejecting the upper region. The next day is the budget day. Again, during these areas, when the market comes to these areas, there is a lot of rejection. In alignment with that, I see there is a wedge pattern over here on Nifty, a rising wedge. Now, is it a perfect rising wedge? No, but it is following all the properties of a rising wedge. In the sense, it is a weak up move in an area where there have been strong down moves earlier. It's a weak up move in an area where there have been strong down moves earlier. So all that put together, I see what? That the market is moving up. And is the volatility going up or is the volatility going down? Over here, is the volatility going up from here to here as the market goes, or is the volatility going down? Answers please. Okay, I'm getting some answers. Like the participation, the volatility is going down, right? So hello, yeah, sorry, there was some network issue. So when there is an up move and there is a volatility going down, okay, what does it signify to me? It signifies to me one fact, that now there could be a possibility of a reversal. This is what the momentum analysis, the analysis of volatility is telling. Now what do I look at in order to gauge this volatility analysis? What do I look at? I start reading indicators. I read my indicators on the Bollinger Band, because Bollinger Band is an indicator that marks to me how the volatility is. Okay, so I will put the Bollinger Band in front of you. I have explained about Bollinger Band in some of the previous videos also. So when the nature of Bollinger Bands is, when these bands expand, they show us signs of strong volatility, and I like strong volatility. But when these bands tend to contract and there's a lot of movement within the range of these bands, I see an absence of volatility. Now when I'm seeing that the price is constricted after a move on the daily chart with low volatility, okay, if the price is constricted in a small range and there's a burst out of the price, and I put this in context with my weekly candle, in context with my daily chart, in context with my intraday chart, what do I notice? That there is a strong move which has begun. Okay. Now, one thing again is very important in trading, which most people don't understand, is risk to rewards. Okay. Now, how many of you, can I have a raise of hands, have found yourself making small money on some trades and then losing it all on one trade? How many of you have found yourself making small amounts of money in multiple trades, but then you lose in one trade? Can I have a raise of hands, please? I see only 3 hands raised, 5 hands. Oh my God, so many more, right? So one more important aspect is risk to reward. Now, if you have got the risk to reward in your favor, you are able to understand how to pull off the trade in a more professional fashion. Let me give you this example again. So when I saw that there's the entire candle that is closing below the lower band, this is a trigger that volatility has started. This is a trigger that volatility has started. Now, after the volatility started and there were trendline breakouts, etc., I'm not making the chart too dirty for your understanding. Okay, the momentum applications of RSI. Okay, there are multiple aspects which one can read, and many of my students also took this trade. Okay, one of the students who took this trade is here also in this webinar, right? So at this level, when you're looking at 31,100 area, you are wanting to now push yourself into the 15-minute chart if you're an intraday trader. Okay, so I like trading intraday when I see that it is worth it. Okay, so my essence was that, let me just remove the Bollinger Band so that we can see it clearly. So my essence of this trade was that after the first 15 minutes, okay, we see that the hourly chart is closing lower, but there is this small sideways movement. Okay, there is a principle on Elliott wave theory which talks about extensions. All of this which I am talking about, Elliott wave theory, or when it comes to the analysis through momentum, analysis through indicators, analysis through candlesticks, all of this is a part of my course, right? And this is an online course which is for 15 sessions. If you are interested, of course, you can contact my team on social media. You have a lot of contact numbers, or you can send your number over here. I will forward it to my team. But over here, when I am looking at this, there are certain points which I want to raise. One is that we are coming close to a very important interaction zone. A very important interaction zone where there has been previous interaction between the buyers and sellers. Now, I always say this, it is very important to acknowledge how we are coming to these interactions. It is not just about, okay, this is coming to a support, let me buy. How many of you have made this mistake that the price is coming to a support, it is falling like a knife, but you went and bought over? Why? Because at some level you feel that it is the easier trade. Now, at this point, 90%, 95% of the people think it is the easier trade to go and buy. Because we have always been born and brought up thinking that भैया bargain है तो अच्छा है. If there is a bargain, then it is a happy-go-lucky thing, right? And over here, how the professional trader thinks is that there is a trend which is espoused. There is volatility, there is momentum, there are pattern-based analysis, which are all pointing towards the downside. And I'm hitting this interaction zone as if a huge ball of a metal ball is banging on a very big wall. Okay, there's this strong wall which is there, right? And it is coming at a very high speed. It's coming like a train. And when this is happening at a very high speed, when earlier it happened, when the interaction points, okay, it came over here, the interaction points over here acted as a cushion, acted as a shock absorber. When the price came falling, it came and fell slowly. It accumulated some, stronger hands accumulated, and then there was the up move which followed, right? But when it comes to this situation over here we are not seeing a slow fall, we're seeing a very fast fall. Like complete knife cutting through a banana as if. Easy, strong fall. And when there is so much participation in the market, in the sense that so many stocks are participating and falling together, okay, all these cues are there, you are seeing some slowdown near the region of this interaction zone. Now personally, my understanding is that when we have crossed and closed below it, all the buy orders over here of the buyers who are trying to protect this area are taken out very strongly. And when there is strength, I like to trade with this trend, and therefore I went over here short using some puts. Now the put I chose was a strike price which also added to my risk reward. So knowing about the options, in the sense knowing about what is the particular Greeks of the options, what are the Greeks of the options, how they behave is very important. There are many traders. I have a few questions to raise. I've asked this question, a different kind of questions today. I want a raise of hands to know. How many of you over here trade options without knowing how their relationship with the price movement is? Can I have a raise of hands? Do you know how the option is related to the price movement? Do you know the mathematics behind it? If you don't know, please raise your hands. That means there is something which is a gap. You are trading an instrument, you are risking money on an instrument which is volatile, because most people tend to take a lot of leverage on options. And you are not understanding the basic idea of how the option is related to the price. So you must know one thing, and I'm saying this for all of you. You can spend your entire life trading unconsciously, trading on the basis of other people's convictions, etc., etc. But it will be in your benefit in the long term if you want to really learn and trade. And if you want to learn, we are technically sorted. We have a 15 session live course with recordings available, and for the lifetime you get assistance and support with me, because every month we have a meeting with all the past students. This is a facility we have added so that the learning never goes down. So that once you are in the course, many people are in full of energy, but that energy should continue even after that. Are you getting my point? So I chose an option which had a particular strike price and a particular delta and a particular gamma, which made me feel that even if I lose money, I will lose a small amount of money. But if I make money, I will make a big amount of money. And the trade played out. It gave some thrashing moves. There were some pullbacks and then further downfalls. So this is like a very smooth day. On the hourly chart, if we look at the hourly chart, it was a perfect, fall. You wait for a couple of hours and you're sorted with your trading. Because the option was rupees 70, 77, 74. That was the range it was moving in. that increases to something which even goes beyond 350 in a day, which is like a 5 bagger. Okay. Now I don't want to blow my own trumpet, but this is the truth, and this is there on Telegram channel, and this is some idea which I share. I'm just here to tell you that these ideas on one trade does not matter. There was another trade I shared when this rise had happened. Okay. Up till this point, being a little conservative up till these resistances, and then I re-entered the trade at the end of the day and made more money the next day. But then it's always a gap. You can't always share exactly your thought process and your trading style. There's always this gap. And I do not want to come on Telegram and jump around giving calls all day if there is no meaning to it. The whole point is that traders need to understand, if they trade in a conservative manner, in such a manner which is amicable to their risk to rewards, amicable to their understanding of price mechanism, there are enough opportunity in the market almost on day-to-day basis. I would not say every day it is day-to-day basis, but almost on day-to-day basis, where you can make decent amount of money, far more than most other professions. I don't want to comment on that, but the whole point is it is also dependent on how much capital you put. Okay. So again, I don't want to deceive anyone thinking that you will come and make 1 lakh rupees a day since day one. You need to understand the process of trading. You need to understand the market. You need to go through certain market phases. And those market phases will help you know how good you are at applying your learnings. If you know how good you are at applying your learnings, you gain confidence. Your journey goes forward. As your journey goes forward, your confidence on taking those trades and your execution improves. Also, when you are trading more consciously, what happens is that you are in a space where you have let go of your past habits. Now, psychology, as I said, is a very important part. And if these past habits start influencing you and you are subject to your past patterns of doing things, believe me, it will be no worth it. No, it will not be worth it. It will only and only be worth it if you have the correct patterns of thought process and execution. Every trade is different and every setup is different. There are trades which take certain time to unfold. There are bigger time frame trades which take bigger time to unfold. Sometimes there is action in the market, sometimes there is not. Sometimes there is wide participation. That means like when the stocks are falling, a lot of stocks are falling together. When stocks are rising, a lot of stocks are rising together. Okay. When there are such situations, there are certain aspects to the major indexes which are easily tradable. When there are situations that you are seeing a very prominent pattern on one of the stocks, then the implications are very different. Say for example, recently I shared this idea on Maruti, right? Now on Maruti, I want you all to know that there are certain things which always go hand in hand. Okay, people always have this question with me, sir, fundamental analysis se trade kaise kar? And I always tell them, fundamental analysis and technical analysis is not an apples to apples comparison, right? Mr. Jay, just wait a few minutes, I will come to your fundamental analysis and technical analysis are not an apples to apples comparison, right? They are always two different things, but sometimes they align together. Like for example, when over here the results came very bad on Maruti, there was already a signal, and I had shared this idea. You can go back to the date. I had shared this idea on my Telegram channel that this is a very good shot. And just after 2 days, there was a strong fall, and the puts that were recommended also went hugely high. And this is all for educational purpose, I'm repeating. The essence was very clear on this trade, and technically also it was very well poised. Now I don't know the result is going to come after 2 days, right? I do know the results are going to come after 2 days, but I don't know how it's going to behave, because how the results will be is not known to me. But I do get a technical cue before that. Similarly, in the recent developments, these support areas which had been taken broke very sharply. Now these are the kind of trades which I am talking about. When you have a 300-400 rupee movement and the lot size is big enough, I mean, because the price is big enough, the overall valuation is big enough, you have a chance to make money, very decent amount of money, provided you wait for the quality of these kind of trades. Most people just run into over trading and taking incorrect decisions in a hurry. And I don't want that for you. That is why in our course we also have a lot of attention on trading psychology. Because ultimately, how you carry yourself as a trader in your life and your trading life makes a lot of difference to how you're going to pull off your profits. Okay? Is everybody with me on this? Is everybody resonating with me? Please raise your hands. Right? Right? Is everybody paying attention? I know it's market hours. Some people may be busy seeing their positions, etc. But these are small things I want to share. And as I speak, we see Nifty has also crossed that area which we were talking about, and is giving a rise. Right now, once we cross these areas and preferably close above these areas, we make something called a cup and handle pattern. Okay. And if you come to the course, then I can teach you a lot of patterns and the nitty-gritties of the patterns which are in question. Okay. If we close above this area. Now we also must understand that the overall trend is down. So let not any kind of targets be overly optimistic, right? Overly optimistic targets are not acceptable, are not really something which will give you something, okay, all the time. Sometimes market movements are very strong, but otherwise the overall scenario is such that you must understand overly optimistic नहीं होना चाहिए, ठीक है? Okay, I have a few questions which are coming. So I have Mr. Jay asking about LNT. Can you please repeat your question about LNT? Can you just elaborate on that question? You went long on puts at this level or this level, or what exactly was it, Mr. Jay? Please ask me the question a little more clearly. And other people who want to ask conceptual questions are welcome to. Okay. Okay, somebody is asking that how do we find out when market is going to be volatile? So the thing is, you have to, okay, Mr. Rahul, you have to make sure that you first sit with the proper knowledge and then you sit in front of the chart. If you sit in front of the chart without the proper knowledge, you are just seeing price go up and down, and it is going to create the same emotions of excitement and being in a hurry or feeling regretful or overestimating, underestimating the potential of a trade. First thing you need to do is you have to sit with the knowledge. And if you are able to sit with the knowledge of the chart, then obviously you are at a better position. You have to mix up your analysis of different angles and see something from 3 different perspectives. Then you will see high probability trades which are coming to you rather than you going to them. We all know that every day the market does not move in the same manner. And if somebody comes and tell you can make monthly so much or weekly so much, daily so much, it is a pure lie. You can make a lot of money provided you have the right talent and skill. You have the correct reading of the market and you have the correct emotional management. Right? Okay. So you are a long on option, Mr. Jay. Is it a call or a put? Let me check. And since when are you long? So how, like what comment do you want me to? So if there is something which is fallen, do you have a stop loss in place? Do you have a stop loss in place? Is the stop loss based on the option price or is the stop loss based on the stop loss can never be based on the option price. Always have stop loss based on the price of the underlying asset. Okay. of course you should exit. If your stop loss is triggered, of course you should exit. The rest is of course up to you. And this is like a session in which I would like you to ask questions which are more broad based, which will help everybody who is watching this video on YouTube, who is going to watch this session, who is present over here, who is going to benefit for their lifetime, right? So I would like to have that kind of questions by everybody. Okay. There's somebody asking about the stock Hindustan Unilever and that they went short. So one of my students is over here. Now he says that he went short on Hindustan Unilever when the price, when Nifty also and Bank Nifty also, everything was falling one day after the budget. Now this is a very good strategy and very good trade. There were multiple cues. We saw a shooting star pattern on Hindustan Unilever. Now shooting star pattern is a pattern which is bearish in nature. Okay. Which is bearish in nature. And again, this is a high wick and higher prices are getting rejected. So he went short in the morning itself and seeing more falls on the price. So that's a great thing. Awesome. That's awesome, right? Yes. You were also looking at the weekly chart. Okay. So on the weekly chart, he says that it was in the zone of this evening star pattern, which is very true. So the zone of this pattern was also helping. So that is what me and my students do. We make a holistic analysis. Okay. Now we have another question which is coming in by Mr. Molaji Khan. Is fundamental analysis won't work in daily trading? No, fundamental analysis, you have to understand, is analysis which is based for the long term. When I'm talking about that there is good monsoon or there is bad monsoon, it cannot give me a stop loss. When I'm doing the analysis on price, the assumption of technical analysis is that prices don't move by magic, they move by real buying and real selling. And the assumption of fundamental analysis is that if I take a lot of fundamental factors together, if they are pointing something for a stock, suppose I say the stock of Yes Bank, according to my fundamental analysis, if I put all the factors together, the stock should be about 200 rupees, okay, instead of being at 92. In that scenario, over a period of long term, it should come to its should be value. Fundamental analysis is about valuations. It is not about anything else. It is not about trading intraday. Because if you look at the chart on the budget day, there was so much up and down over here in the beginning. Okay, in fact, in case of Bank Nifty, there was even more. There was so much whipsaw movements over here. So has your view on the budget told you exactly which price to go short or which price to go or keep exact stop loss? No. But if you understand the nature of price movement, regardless of the news will keep coming and going. Regardless of the news, movement will be there and you will be able to capitalize on it. Personally speaking, I see the budget or I don't see the budget, I would have taken the same trade. I know the good or bad points in the budget or I don't know the good or bad points in the budget, I would have taken the same trade. So as a technical trader, my personal prerogative is that I want to trade the price. I do not want to trade the news. Yes, sometimes the news and the price go hand in hand. Sometimes the news and price go hand in hand, they act as a catalyst. Okay. Okay, Mr. Nimesh, what you can do is you can send in your number, my team will contact you. It is a 15 session course. Okay. My team will send you all the details of the course, what we are going to do in each session. It is going to be a course which online sessions like these. You can send your number and anybody else who wants to send their number, they can send me over here on a message and then my team will contact you. Not an issue. Okay. So the whole point is that budget or no budget, if there's a price movement which is showing me similarities, what do I mean by similarities? All the studies of technical analysis, all concepts come from the same ground level, that prices tend to behave repeatedly in a similar manner. Note, I'm saying similar, I'm not saying same manner, I'm saying similar. So when they're trying to behave repeatedly in a similar manner, in the past also, if I do practice and I encourage my students to do, as I show examples from the past, same thing I show of one concept over 3 different time periods or 3 different time frames or 5 different places in the market, 10 different stocks. So there is so much repetition in these concepts. Why is that repetition there? Because human behavior is repetitive. Because we tend to do the same things again and again. Why does a human being tend to go in that negative, destructive, self-destructive pattern? If you want to know that, you should definitely join the course, because I personally believe that showing people technical analysis is not enough. You need to teach them how to become whole as a person, as a trader, who has a thought process which is clear and is able to utilize his intelligence better. If you are not psychologically fine, you are not able to use your intelligence, there is no point betting your hard-earned money. Am I right? Are you guys resonating with me? Can I have a raise of hands? Yeah? Nimeshji, we are starting on the 10th of August. You can choose Hindi or English batch, not a problem. Morning 9 a.m. to 11 a.m. a batch in English language will start. And after you have ended the course, you have completed the course, you get in along with all the past students in a separate group. And that group, we have daily discussions and whoever wants to discuss their ideas, etc. Also, we have meetings with me on monthly basis, compulsory, minimum 1 meeting a month I have with them. So there is a lot of lifetime facility which we have. Yes, I have got your number. Thank you for sending a number. My team will contact. So again, as we are seeing the development on this chart, we are not seeing the price going and closing above these areas. We see that the sellers who are sitting over here, we are not getting the breakout of this pattern. And it's completely fine. Partly it is also there because when I was flipping through the other charts, and I do use certain scanners, etc., but I recommend only those who use scanners, who understand those scanners and build them themselves, right? I'm not seeing there's a very broad-based participation in multiple stocks. So when I see stocks which are moving and selectively, and the major trend for some stocks is still down, then I get an understanding that maybe you should be careful and wait for the breakout levels to hit on it. So that is how I perceive things. Even on Bank Nifty, a similar structure is there, and it is hovering around the resistance area, but nothing as of now is happening. Today is the Bank Nifty expiry also. So please note that on the expiry day, we often see some sudden movements take place in the last hours. So that could be one input which we can take away. But that is not something which is, for sure to happen, right? So guys, if you want to ask any conceptual question or anything particular to a pattern or stock, please feel welcome. Okay, somebody is asking about Century Textiles. Right. So yes, Century Textile is in a support zone. It is hovering around the support zone. Yes, it is. Yeah, I'm having my eyes on the stock too, but I don't personally see any sudden triggers over here. So I'll wait out. IT sector, has been, some of the students have been tracking it. Or the falls on TCS have been amazing for some students, right? Yes, I was able to see the breakout happen of these levels, okay? And anybody who is trading can again see that after this squeeze of volatility, there's an expansion in volatility. So in the first 15 minutes itself, the stock started falling like a stone. And when you have such falls, you can understand how the end of the day can be. I will get significant movements. That is true. Sun Pharma, are you looking at a double bottom in Sun Pharma? Let me check what you're looking at. Which time frame are we talking about? Okay. So, no, Jivanji, the double bottom happens once we see that there are two lows close to each other, but when the breakout happens at this zone. So when we are talking about something like a daily chart, or here I would also say it is, very much plausible on the weekly chart. So we want more price development, and then if we cross 410 zone, then it is something which we want to participate with. Okay. Until then, there is not a double bottom. It is a low close to the previous one of the previous lows. Yes, it has taken a support, but I cannot call it a double bottom because we are now heading towards the 410 resistance area also. If we take resistance in between, okay, then obviously it will be something. Now, if I'm looking at the hourly chart and I wait for the developments, obviously I can get some trade triggers in the hourly, but that's not a double bottom. Okay, so I hope that is clear. Okay. So no, I do trade myself also. It's not that I just teach, I do trade myself also. It is just that you have to understand that the implications of professional trading. I've been in this business for about full 10 years now, close to full 10 years now. So the implications of professional trading are very different from the day-to-day, calling up the broker for taking a trade and finding if you can make money every day. That is how now it is. And, people who have come to me, those students who were beaten down psychologically or didn't have the right results, or for that matter, those students who have understood things, understood something about technical analysis, but they don't have the full clarity of the methods. They have benefited a lot, and they have taken up that professional style. In professional style, the market always dictates when you will make money. You never dictate. You can take the attempt on the basis of your analysis, but you cannot dictate when you will make money, right? Is everybody resonating with what I'm saying? Kindly raise your hands if you're paying attention, right? Because the market hours, I know that a lot of eyes will also be on the computer here and there, but I'm really happy that all of you are, so many people are here today and support and appreciate all these small initiatives which I take, right? Someone else? Okay, yes, please send your number, my team will call you, it's not to worry. They will send you all the necessary details of all the things. Now we see again this resistance area not taken out. Sellers have given some pressure. Not that I like to, go for every small commentary on 5 minutes, but yes, this is what has happened. And trade triggers, as more development happened on the chart, which lead to more higher volatility. If I just look at the weekly chart or the daily chart, right now I don't see there is a lot of significance, okay, from a clarity point of view. So trade triggers can come about. Now this is what happens when you're looking at the smaller time frame. So if you're an aggressive trader, then you would want to sell around the resistance area. But you're selling against the ongoing trend. So that way you have to understand the risk implications and when you have to react. I personally prefer trades which give me a lot of reaction time. They can be intraday trade, but they should give enough reaction time so that in case there is something here and there in the market, quickly I can get out of the trade. I don't have to worry about finding the liquidity or setting my bids or anything. And once you become methodical, then you start behaving in that way, that you find or look for those trades only. That is the most beauty of being methodical. Okay, Mr. Neeraj Gulharji, you are saying that trend line on 5 minutes. See, 5 minutes chart is not very effective. 5 minutes chart is not very effective in terms of looking at for trade triggers. Okay, if you see a trend line, okay, so let's see, say you are taking a trend line on a particular time frame, 5-minute chart. Okay. So you say, okay, I'm looking at this trend line, it's looking very vertical. But what if what if the market, goes, so if you've taken a trend line, I say this is the trend line. Okay, this is the trend line. But what if the market goes up by a different slope altogether? That sensitivity is very high in case of these situations. Okay, like right now, if you see, if I have to draw a trend line, okay, first of all, follow all the rules of the trend line, see if they're matching with the rules. Yes, this is valid, but I have to make sure that this valid consistently over a period of time, over months and months. If I trade using just 5-minute trend line breakouts, is it valid? There is a resistance on the top, so yes, that is an additional point. On the hourly chart, there's a small shooting star pattern also. That is an additional point, right? But this is all developed after it has taken a resistance, and this trend line, if you take the entry with it, what is your stop loss? What is your target? Okay, so these are the small things which you need to see. Is there consistency throughout the method, like how much ever you use it? So this I feel is a very important point, because here you will come and say there are supports. If you start looking at the 5-minute chart, you will come and say there is a trend line breakout over here, but then there is a support over here. Okay. After pattern breakout, the nature of movement is different. After resistance which has been taken, the nature of movement is different. In different market phases, it is different. You are not supposed to do exact same thing every time, okay, because they happen in such different phases. Are you getting my point? What I'm trying to say? And the same thing, if it was, I'll just tell you this, sorry, I'm getting back to this. So same thing, if this was against, okay, in this situation, I find it pretty okay, this is possible. But in the same thing, if it is in an ongoing uptrend, then the hello. Yeah, I'm sorry. So after somebody is asking, after analyzing multiple time frame, my view on the market. My personal view of the market is that I'm a bit neutral right now, and I'm waiting for my view to become more fully ripe. Okay. So right now I'm more neutral and waiting for it to be more ripe. So I do share my view in forms of trade ideas or something when I have clarity and I have the time to share it. But okay, if I have to tell you holistically, we are right now cushioned in the lower end of the gap, and this previous interaction zone, which was very important, okay, we are trading under that. So there is a lot of weakness in the market from that perspective. That is my short-term view in terms of the daily chart. Then if I go to the hourly chart, as I was talking about the levels today, that levels have not been taken out. So welcome, thank you so much. So those levels have not been taken out. So again, I don't have a trigger. The broader view is to wait and watch and wait and watch. And 80% of professional trading is actually waiting, right? But there's a quality to the waiting. You see, you are doing other business. How many of you over here in some other business or profession? Can I have a raise of hands? How many of you are in some other business or profession? Right? Right. So there is a quality of waiting which you need to give. Otherwise, you will start sitting and procrastinating, right? This is the exact same thing in trading. Most people are procrastinating, and unfortunately, they are procrastinating when they are in action. So when they're in action and they're procrastinating, they're tending to do self-destructive things like losing money consistently. But you don't want to do that, right? So on that note, we'll wrap up today's session. I'm really thankful that all of you came. And thank you for those who have shown that they want to join or shown interest in finding more about the course. You can still send in your numbers or contact my team otherwise in order to, if you want to join the course. Full details will be given to you. And some of my old students are also here from some previous batch. Thank you for seeing me again. It's great to see you guys. Welcome. Okay. And a lot of new faces too this time. Thank you, Jivanji. Thank you, Karthik. Thank you, Neeraj. Thank you all. Keep in touch. Do keep on tab with the developments on social media, etc. And feel free to get in touch with my team. And looking forward to some other session like this at some other time. Okay, you want to? Okay, yeah. It's starting on the 10th of August. You can join by giving a small advance right on assuring a seat. Okay. Chalo. Thank you so much. Have a great day.